microphone, but I'm thrilled to be here. This is an important topic and one that is very, very important to us. So I'm Riva Krut. I'm the Vice President and Chief Sustainability Officer of Linde plc. And because Linde is at the same time a very old company and also a very new company, I want to spend a little bit of time introducing us, and then I'm going to go into the topic that Mary has asked me to address today. I'm going to speak for about 15 minutes, and as I was asked to, and I think then that really the value will be to have an iterative conversation between whoever is in the audience, and I'd be very happy to share the experience that we have at Linde. So the first is this is Linde's mission, vision, mission, values on this page. Our mission is to make our world more productive through technologies and services and so on to help sustain and protect our planet. Our vision is to fulfill, is to be the best performing industrial gas company where our people deliver solutions in a connected world. And you'll instantly see that some of the issues around ESG are on this page. Our values: safety, integrity, accountability, inclusion, and community. Again, all of those are essentially ESG issues. The new company looks like this, giving you just a couple of data points. I'll give you some more. We were formed in 2018, in October 2018. It was a merger of equals of these two very large industrial gas companies, Linde AG, based in Germany, and Praxair, Inc., based in the States. Each company on its own was about 100 years old. So, they both were very, very successful companies for investors, very successful companies for shareholders, very successful companies for our communities and our employees. And it was a merger of equals. So we have one Linde. We serve more than 2 million customers in 100 countries. We have 80,000 employees. We also have a charitable contribution program, and we have a large technology group, so hence the information about the patents. In fact, we consider ourselves a technology company. To give you a sense of scale, group sales, so we're in pro forma 18, so if we took the two combining companies in 18 pro forma numbers, we were 28 billion in sales. We are made up, though, of an engineering group and a gases group, we call it. So when we look at gases sales, you'll see on the right-hand side the 90% is serves those markets. It's a great business to be in because we serve both resilient markets and also markets that are much more volatile. But a nice mix of businesses across a nice distribution of geographies. Very solid business, and we've been performing very well under the merger. So we're in 100 countries. This gives you just a sense of where we are, and as you can see, we are now a very, very large company with a very large footprint. I come from the legacy Praxair side of the organization, so I'm based in the US. I'll speak more about that in a moment. But really, we have become a much larger organization. Linde AG was bigger than Praxair in terms of revenue, employees, numbers of countries, and so on. And so it's really made us into a very substantial global company. We sit in the chemical sector, formally. We're in basic materials chemicals. And so although we're not a pure play chemical company, we don't really have toxic emissions. We don't deal in hazardous materials. We're principally separating the air, which is what you have around you, and we use a lot of natural gas to make hydrogen. But we do nevertheless sit in the chemical sector, and we have now become one of the largest chemical sector companies in the world. At the end of 18, we were able to at least be able to combine some of our legacy history in terms of our sustainability reputation, and I'm sharing this because I'm now, I'm going to quickly get into some technical stuff, but I wanted to give you a sense that we are very proud to have a strong sustainability, a history of sustainability recognition, and we also are very concerned to demonstrate that with metrics and data to make it clear that, you know, we don't just say we're good. We try to show that, and we demonstrate that with a number of output and impact-oriented metrics, which you see here. So again, I'm not going to go through them, but we have the credentials to be speaking to this issue, and I'm certainly very proud to have been asked to take on this assignment. I thought it would be interesting to do a little walk over the history here. And I'm going to start with how Praxair reported, and this is relevant because Praxair became the successor in interest, and we'll talk about that in a minute. So our annual filings become the history of the combined company. So in terms of how we did our sustainability reporting, I've got kind of a slide on input, a piece on input and a piece on outcomes. Basically, though, it was a US-based multinational, very compliance-driven in terms of our financial filings reporting. Sustainability really seen as an add-on and doing its own thing. But increasingly, that started to change before the merger. So on the input side, what I say is that we have common reviewers for the annual report and for the sustainability report. And what that meant is that for pieces of the 10K for years, the Praxair side of the house invited myself, but also some other folk on the ESG side, safety, environment, and the legal counsel for us, for our work, to provide information into the 10K, particularly because of the climate change disclosure piece and also because of the risks component. And so what I'm trying to convey here is that when it started, I was asked in very late. I was given a piece of text that was almost approved, but that, you know, really the last 5 or 6 years, that request has been coming earlier. And then about 3 or 4 years ago, I was asked to join our disclosure committee, which has been great. So that means that sustainability now has a seat at the table for all our disclosures. So what we have seen is the incremental integration of sustainability into the annual filings, but also what I was doing in the what we call the sustainable value report, is increasingly trying to make clear the hard links between our financial filings and our sustainability filings. Because actually sometimes I found it was really a question of translation. It was a question of the sustainability people simply not knowing where to find information in the financial report that was actually relevant, and how to use that to actually start to give elements of ESG information, and then vice versa as we slowly started to build the bridges between the departments. So, you know, we were slowly doing that, and things were tracking along in the way that I think is not unusual for a large US multinational. On the outcome side, the annual report, as you would expect, has contained climate change text consistent with the SEC guidelines. We would review that each year and update it. We would also obviously be a part of the risk assessment, and that those risk factors in the item 1A would be dropped into the 10K. We did get physical aspects of climate change included along with along with regulatory concerns, and then there's a short piece on environmental matters. Now again, on the Praxair side of the house, for some time our proxy and our board have made it clear that our non-financial compensation includes ESG information, and that has been carried through to the Linde organization, so I'm going to describe that on the next slide. But also in the Praxair organization, we had a board committee for technology, safety, and sustainability. So in governance terms, sustainability had a home in the board. So I'm going to now go to the next slide, I'm sorry about the highlight there. In the Linde organization, again, we have common reviewers for the reports, and we have the incremental integration of sustainability. On the outcome side, though, now we're now a completely different organization. We're Irish domiciled for tax purposes, headquartered formally in the UK. But in a practical sense, we have our management committee, our C-level executives sitting in Germany and in Connecticut. We are come under the EU CSR directive, which means that our IFRS report needs to include a non-financial statement. And for those of you that are unfamiliar with that, that means that we need to explain and describe issues around governance, ethics and integrity, environmental matters, social and employee matters, and human rights. So 4 themes that we need to provide in our IFRS report, which we did for the first time in 18. For our 18 report, so that one that came out March 19. What we were very careful to do is to keep the texts consistent. So if in the 10K we had a climate change disclosure, we kept it consistent with what was in the IFRS. One thing I do want to point out is that the new organization is maintaining the alignment of executive compensation with what the board is calling Linde's strategic business objectives. And this text comes straight out of our proxy to achieve best-in-class performance. These are the objectives in ESG, the best-in-class performance in safety, environmental responsibility, global compliance, productivity, talent management, and financial controls. And the proxy then says that the annual payout of variable compensation is impacted by non-financial performance in these areas. So it just gives the sustainability side, the integrated reporting side, a nice runway, because really the point at which this report came out, we were brand new. You know, the board had really maybe had 1 meeting. So at this time, and again, I'm sorry about the spelling mistake, there's no board committees yet established for sustainability, or any actually subset board committees, but I can tell you that sustainability is receiving a lot of attention. So now, because we don't have committees, you have to present to the full board. So I have presented to the full board in June, and there was another presentation made to the full board on our clean tech strategy at the end of the year, and we have more going out at the end of this month because of information that I'll be giving you in the next couple slides. So you know, we are working to integrate more into sustainability and ESG information into our annual filings. We remain very compliance driven. So the Irish rule implementing the EU CSR directive, which is what we need to comply with, is actually not very strong in the area of that we need to have our data audited, for example, in the non-financial statement. And so, you know, we really put in a pretty much a de minimis response last year, and our ambition is to grow it incrementally. So you're not going to see a step change from us. It's just too unnecessary, too risky, and we will chug along. But we will. My hope is we will provide more information each year. So that is how we have been looking at that issue. I wanted to talk a little bit about how we managed to do our reporting in a merger year, because it was quite complicated, and it involved some strategic choices that we had to make, and then we had to stick with those choices. So I mentioned that the merger occurred in October 2018. What that meant is that, formally speaking, as Praxair was the successor of interest, is that when we reported for 18, in our material, in our reports for financial year 18, which is calendar year, we reported 12 months of Praxair, the whole of Praxair right through, and 2 months of the new Linde organization. And then there were a whole lot of puts and takes, because we had to, you know, coordinate how we filed, and what happened with JVs and various other decisions we had made around scope. But it essentially meant that we were reporting what we called internally 12+2. Now, it's probably worth talking a little bit about that, because at the same time as we were doing that, we had to make a decision about how do you report sustainability. We had a very strong organization coming in to the merger on the Linde AG side, whose history, from the financial filing point of view, was right now erased. So it is very difficult to talk to colleagues and keep talking to colleagues and to run these organizations and do that. This is a very tough decision. The second is that Praxair had global sustainability targets covering our whole organization that were managed targets. So we would report them mostly every month. We would look at performance every month, and then we would report them annually, and then report those in our sustainability report. Linde had a slightly less developed set of targets, but more importantly, we couldn't retrospectively go back and say that our targets governed both companies, even though they were covering similar themes. So we had to make a decision that we were going to, in fact, only report Praxair, performance against Praxair's legacy Praxair's targets. So our 2018 sustainability report is a very strange beast, and it needs to be carefully understood by readers. And normally the CSO, in writing the letter in the front of the sustainability report, you write something that's high level and aspirational and talks about your vision and your achievements. I didn't do that. I spoke entirely about scope, about how we were scoping out the report in order that readers didn't get confused. So we reported 12+2 for, let's say, energy use, and then we had to dial back for the target. We would only say what the legacy Praxair target was, legacy Praxair performance against target, and so on. Tough decision, but probably the correct decision, in order that we got our house in order and we were able to figure out how to go forward. It has not helped us in the sense that investors looking at our ESG information are impatient, right? They want to see our targets now for the consolidated organization. They want to see consolidated information. And we, at this time, only have 12+2 for 2018. Okay, I have to say, Mary, I think I actually sent in the wrong presentation. I think that in closing, what I want to speak about, and I'm just going to pull up just because it's prettier to look at than I am. In closing, what I want to talk about is the complexity of providing ESG information in the current environment. My experience is that we are eager to provide it, we do a good job providing it, and we will be developing and issuing our new goals and targets. What I have found in this last year is that investors have become more interested than I have seen in all the years I've been doing this, which is now a long time. And they're impatient to see information, and they're deriving meaning from the data that they see. My view is that ESG information remains in its infancy. I am very eager to see the accounting and auditing profession bring more value to this. In many respects, I think we still haven't learned to count. And yet the people who need the information, and it's not just investors, it's obviously also people in industry, it's my management team. They want to make meaning when they find relationships between two data points. And so they do things like that. They say, well, if you have greenhouse gas emissions and you've got sales, we can divide your sales into your greenhouse gas emissions, and that'll tell us something that we're going to call greenhouse gas emissions intensity. And that being one that on its own is very complicated. And my view is that the accounting methods are still in their infancy, and that some of our key external frameworks really haven't given us enough yet to be able to create, if we ever will be able to create, comparable information. What I do find is that the business model is crucial to provide a context around which information is understood and received. Transparency, obviously, is vital, and also that the person looking at the data understands something about what they're looking at. They should understand the sector. They should understand the business. I guess it's part of the business model. And all too often, what we see is that people want to look at a data point and pull it out and make meaning with that. I'll give you just one example, and then I'm going to close for questions, as I think I've probably used up my time. Some time ago, we were getting calls from analysts who said, your greenhouse gas footprint makes you the most carbon intensive in our portfolio. And they were looking at, I think it was 2016 information. And we knew that nothing had changed in terms of what we did or our peers did. So we couldn't understand why they thought there had been a material change and our greenhouse gas emissions intensity had got worse. And what we found is that actually what had got worse was currency. So because there were headwinds that year from for firms filing in dollars, we ended up taking a hit, and our intensity appeared to get worse. But it wasn't a statement about intensity; it was a statement about how currency was reported. Now, what's interesting is that the analysts looking at that think that they're looking at a trend. But a greenhouse gas emissions trend, but what they're looking at is a currency. The biggest variable was currency. It was helpful to explain that. It took us a lot of work because it wasn't obvious at the start. It was helpful to explain that. It didn't make a difference to the methodology being used. So the base methodology for greenhouse gas emissions, which for us happens to be a key metric, remains scopes 1 plus 2 greenhouse gas emissions over reported sales. So this is just an appeal that if you are playing in that space, that there are costs and benefits to the rapid standardization of data when in fact the numerator, in this case the ESG information, isn't well understood. It's best practice, and so we picked the 6 that you see there. Then we took this model of input to impacts that was developed by the World Business Council on Sustainable Development, and you can see the link there. You can look it up. And I just found it really helpful because it said that, when you spend a resource, if that's money, then how do you show, the activities that precipitates, for example, products or services or training and so on. How do you show the outputs of that? For example, how many products do you sell? How many people do you reach? How do you show the outcomes of that? For example, if you sold volumes of stuff, then can you show that you change behavior in certain ways? And how do you then show the impact, which is really the furthest out? So that becomes goal level changes in the lives of the target population. It becomes the furthest out, the hardest to measure, the most fuzzy math, if you like. So, there's a couple of examples of the kind of thing you could measure: changes in educational attainment, changes in health status. I thought that this really corresponded very nicely to the integrated reporting value chains, right? So they asked you to look there at the different capitals and how they flow through the organization from input to impact. And I thought that this WBCSD report did a nice job. So what we did is, here I'm just going to show you 2 slides with 2 goals, right? So here we have a target, in our 2020 target, that we're going to save $500 million from something called sustainable productivity. And that is our eco-efficiency program between 2016 and 2020. So the input is that we have a mature productivity organization and we have a business model consistent with resource productivity. The activity is that we identify, measure, and aggregate our natural resource conservation opportunities. So for example, for a productivity project, if it is a sustainability project, then the project person goes in and checks a box, and that opens the fields and allows them to enter environmental information. And we then calculate that as, is that top line or bottom line contribution? So most of productivity is cost saving, but some of it's incremental. And then what's the output from that? And you can kind of basically walk your way, I'm not going to read it for you, but you can walk your way through this, and what we were able to show is that the output we measure, and we report that. The outcome, so, you know, we're able to show what percentage of all productivity was sustainability, how much of that was incremental revenue, which is fantastic top-line growth. We're able to show that sustainable productivity was generating higher replication rates than regular productivity. If you know anything about productivity, that's gold that you take to the bank. So, you know, we were able to show our outcomes. And then we also were able to describe something about impacts, which is really the further out. Now, what I'd like to invite you to do is imagine this is a circle. And what we think that this rather linear presentation shows that our target in the top left can be measured by looking at inputs, activities, outputs, outcomes, and impacts. And those impacts, if you then go up to the SDG goal, help make a contribution to a global target like this SDG, responsible consumption and production. And I did it a second time here on something that's actually much easier to understand, which is just, you know, that some of our applications provide safe drinking water. So, you know, to understand the business model here, we have a target that says that we want to enable the delivery of safe drinking water to 250 million people. On the input side, you know, this is what we do. Our gases do this. The activities provide that more specifically. The outputs show what that does in terms of projects. The outcomes, we measured that year that we provided safe drinking water to half that target number. And we feel that that is scalable. We can make a commitment to bring benefits to 250 million people. And again, if you look up to the top, it shows how this helps to do our part, right? To contribute to that SDG target on innovation infrastructure. I didn't make this one about the SDG target on water, which it could have been, because our business model is not principally about water. Our business model is principally about infrastructure and supporting, you know, large industry. So I stuck with that. But I think that this is a helpful way to think about integrated reporting and to look at impacts. We've done other work, but I thought that this would be just a helpful thing to display because I thought it was quite creative and really trying to work the integrated reporting framework to show that, you know, bearing in mind the target is consistent with our internal expectations, external expectations, and all the external frameworks. It's a material metric for us. We have had that validated by all those stakeholder contributions. We then are able to show on that material metric how you can do this walk through inputs to impacts and how you can really show that you are helping to contribute to something that the world is actually saying we need.